Hey everybody, welcome to the Shut Up and Do It podcast, the place you can come and hang out with us while we go through all things real estate with a focus on bringing you top quality topics and speakers, all who believe in a get it done manner. I'm your host, Nick Allard, creator of the complete deal flow system and principal with AA Real Estate Group. And Shawns, my partner today, Mr. Robbie, had to go and pick up his daughter at daycare because she probably had an eye injury or an eye puffiness or eye something. And I don't expect anyone who doesn't have kids to understand, but that's okay. I am super psyched today to have both Mr. Shawn and Mr. Eddie here of REIGuard and Affinity Worldwide to kind of go over, with their stories, where they came from in real estate and how they built their company to where it is today. So, without further ado, I'm just going to turn it over and maybe ask Shawn, if you don't mind asking you the first couple questions here. First of all, guys, welcome to the show.
Thank you.
Thanks for having us.
That's awesome. If I ever talk too much, just shut me up. It's good. And I have some coffee right here. I hope we're all caffeinated up. It's going to be a good time. So,
very good.
Shawn, if we want to start with you, man, tell us a little bit about yourself and your story and how you got to where you are.
Yeah, I kind of fell into insurance by accident about 12 years ago. I knew one of the owners of National Real Estate Insurance Group, which was Tim Norris, who was a basketball coach for a high school team that was a rival of me. I was kind of a larger baseball recruit and came back from college a few years later and asked me to come in and join his agency. And the last thing I wanted to do at the time, he was a nationwide agent and wanted me to come in and do home and auto, and I didn't have much interest in it. So but when we started talking about investors and working with investment properties, and not only 1 to 4 families like what we predominantly focus on now, but larger apartment complexes as well, then I kind of got a little bit interested and joined one of his agencies, started to develop National Real Estate Insurance Group as well as National Condo and Apartment Insurance Group. So we kind of passed business back and forth. And in 2014, Tim and Mike Wren, who is his partner, purchased what was then Core Insurance Group, which was kind of built out of National Condo and Apartment Insurance Group, but purchased us in 2014. Part of the purchase agreement was that I relocate to Kansas City and run their insurance program, and here we are. So it was kind of by accident, and it's turned out to be a great fit for me.
What do you think of Kansas City now that you're there?
Yeah, I'm from Cincinnati, and it's it's pretty much the same city, just Midwestern town, good people. Eddie laughing, but yeah, it is. I like it here.
Corn is corn, right?
Yeah, I just wish you were closer to the beach, but we're all right.
That's awesome, Shawn. Thank you so much. Eddie, how about you? A little story about you, where you came from and how you got to where you are.
Sure. Yeah. I was, I managed and owned television and radio stations and sold out when I was in my mid-20s and started investing in real estate. And ironically, all of my properties that I was buying in Ohio and Illinois and Indiana, the insurance program that Shawn just spoke about started to insure my properties. And so that's where I got to know the Affinity Group. So I came in as an investor 3 years ago. One of the stipulations from Mike Wren, the founder, was you can invest with me if you'll come in and run it all. So I came in to run it 3 years ago. We've got 84 companies. One of them is the insurance group. Just got a lot of companies here in Kansas City. I still live between Atlanta and Kansas City. I live there 3 to 4 days a week, here 3 to 4 days a week. And Atlanta is not the same as Kansas City. Shawn says Cincinnati is the same. Atlanta is like the polar opposite. So
that's awesome. And it sounds like, you came from the investment world. And Shawn, did you also come from the investment world too as an investor?
No, I got into investing after I started in insurance. But no, I actually came from the fitness industry, believe it or not. Yeah.
Oh, the fitness industry. Oh, cool.
Yeah, I ran 4 cities for Bally Total Fitness. I had like 15 clubs that I ran. And like I said, I met Tim kind of just out of the blue and decided to make a change, and then got into some investing in the Cincinnati area, which I've since sold out of when I moved to Kansas City.
Gotcha. Very, very cool. Eddie, do you mind going through, 43 companies, holy cow. What are maybe the top 5 or 6? Are there something you want to go over, anything that's related to each other?
Sure, yeah. Over 30 of them are related to the real estate investment world. So, for instance, Think Realty is a company we built 3 years ago. it's a media company that services the real estate investment industry. We've got magazines on Barnes & Noble shelves. We've got a national radio show in, I think, 54 markets, something like that, with the Wall Street Network, Monday through Friday, conferences across the country. We also have a lot of technology products like RentFax, which is like a FICO score for your property. We have a platform like Loan MLS, which sells notes. We've got Private Money Lending Guide. We've just got a lot of companies. The insurance group. One of the companies that's really exciting is the American Association of Private Lenders. It's interesting because on one side of the world, everybody's looking for deals, it's and looking for money, right? So like on the Think Realty side, everybody wants money, and then on the other side, to lend it to. So it's kind of funny how those worlds collide together. But yeah, we've got 84 companies total. About 30 of them are related towards real estate investing.
Oh, that's awesome! Wow. Yeah. Oh, crazy. Shawn, on the insurance side, I'm just going to say it. I mean, how did you not fall asleep immediately when you got out of the fitness industry?
Yeah, right. I think I was, initially it really was kind of driven by looking at some of the books and some of the existing accounts that Tim and one of his other partners, Kent Littlejohn, had on the already insured with him, and I saw some larger commissions, and I was like, wow, if I want to do this, I want to jump in head first and really do some large apartments. And that quickly changed about 2 years into it when one of my now clients who's been with me for almost 9 years now came to me and said, hey, I just almost lost everything on one of my first investment properties, and it was all because an insurance agent at the time didn't explain to him about what his coverage had and what it didn't have. There were some severe gaps in his coverage. He had co-insurance. He had insured a property on actual cash value, on basic form, had a total loss from a lightning strike, was insured to $100,000. The insurance agency determined it was going to cost $230,000 to rebuild. And because of all these different clauses in his policy that he wasn't told about or didn't understand, he made $22,000 on a total loss. Almost cost him his business. And, he just happened to be in Kentucky, which is very close to Cincinnati. And I drove down to see him. And when I explained to him everything, I guess, it just really lit a fire under me. And I said, this isn't right. We shouldn't allow this to happen to our investors and our clients. So kind of became a mission of mine at that time to really get out in front of things and educate the investors on what can and cannot harm them in their insurance policies, just to make sure they're comfortable with it, so it didn't happen to someone else.
Sure, absolutely. I mean, is there not that you couldn't possibly do this, Shawn, but first of all, for our listeners, I mean, I'm a very, very proud client of REIGuard and of all of the insurance products that you guys have to offer. So I am one of the mindset that I don't care. I want it handled, but I want it to be, of course, I want everything, right? I don't want to have to learn anything about insurance because I will fall asleep immediately. But then once I have a loss, I want everything that's owed to me. So it's the worst, right? It's the absolute worst. Like, is there a basics of insurance 101 for investors and, 5 minutes or less? This would be really cool. We can frame this and put this all over the internet if that's the case. No.
Yeah, I would probably just, there's a couple things. We've got obviously one of the industry experts for Think Realty, where I've got all those videos that can on thinkrealty.com that can actually explain that to them. And it's, 5 minutes. No, property, property cost is driven by, value, what they, the deductibles you carry, the form that you purchase, and then liabilities really can kind of go down a rabbit hole. We can talk for hours on ways that these liability exclusions can harm you. So short answer is no. I would tell you that, you really need to look at your appetite for risk. If you're an investor that wants everything covered, that you just don't want to deal with it, right? If something were to happen, you want to make sure that your investment's covered, then by all means, you need to purchase special form. You need to purchase replacement costs to help to make sure that you can rebuild back to the way you were, and you're not potentially out of pocket costs more than your deductible. If you're an investor that understands that there's risk involved and you're okay with it, and maybe you want to just look at a way to save 30-40%, and start entertaining some of those other forms, such as like a basic form policy, maybe actual cash value if there's not a lender involved. But you've really got to kind of look at your appetite for risk and make sure that you're not overextending yourself as an investor. For
sure. That's awesome. And that was thinkrealty.com. They can see a bunch of your videos at, right?
Yeah, pretty much. I think I've got 4 or 5 of them up now, just about different ways to save on insurance costs, but equally as important to make sure that there's nothing in there that can harm you.
Nice. That's awesome. Eddie, if I will, I only have 8 companies. I am running around and I have serious time management issues. I need to know How do you, can I ask you, how did you best structure your team? How do you best structure your time? And I'm going to end with, what's a day look like for you? How do you deal with the, a day to day?
Sure. For us, obviously we like grouping all the like-minded companies together. So anybody that's touching a real estate investor, we want them working together because they have the same clientele. But we have organized Affinity Worldwide with every company as a silo they have to hold their own. So each one has an asset leader, whether it's a CEO or a president. For instance, Shawn has autonomy with the insurance group. He's expected to keep his own P&L. He's expected to produce, and each one of them run independently. So for us, I've got probably 20 some direct reports. We've got different pods, and we've organized it. And it's taken about 3 years to organize it properly, and we still have a ways to go. But overall, a day in my life is typically meeting with those direct reports. I try to play the visionary role. A lot of them are the implementers. And so where I can, I jump in, I provide vision for those companies, try to show where we could potentially go. And then I love spending time on the technology side. So we bought a technical agency called Rivet a few years ago because we had such large tech debt, being that Mike Wren, who's the founder, bought a lot of distressed assets. So rebuilding all the websites, all the technology that supports them, has been a huge undertaking. So a day in my life is typically up early, go to bed late, and meeting with a lot of guys. And Mike Wren, the founder, we own radio stations, we own bars and hotels and all kinds of crazy stuff. So it's pretty wild. But for the most part, I stay focused on the real estate investment group.
That's awesome. What's been the biggest challenge for you, Eddie, on either turning around any of those assets or what's the biggest challenge you've had so far?
So I think a lot of challenges, but a lot of the challenges are Mike Wren, who is the founder, he retired in February. At least he says he retired. I don't think he didn't retire.
We'll see.
But Shawn knows how much he's retired. But for Mike is in his 60s, and getting the vision out of his head to understand what he wanted to accomplish with some of these companies, because a lot of these companies were distressed assets. Somebody had a great idea, built some technology, built a website, and couldn't make a go of it. So Mike bought it. The insurance company has always been the major breadwinner of our organization. And so it allowed us the chance to buy a lot of these companies. Mike, I think his strategy was to avoid paying taxes by writing off all the losses of these companies. But as an investor and a part owner of this group, I want to make money. I'm happy to pay taxes as long as we're making money. So for us, the technology issue has been by far the biggest challenge, because the tech debt that is associated with a lot of these companies that we've purchased has been enormous. You think about our insurance group. The demands that insurance have today. I have Geico for my car insurance, right? And I've got it on my phone, and I want to update my cars and change it right on my cell phone. I don't want to talk to an agent. I don't want to do anything, that takes longer than 3 to 5 minutes. And so making sure that we're looking as a whole, a group, and keeping up with the standard of the industry. So we launched our portal this year, so that people can go in and look at their coverages, pull down all their paperwork, things like that, has been really big. But it's also been a really big undertaking, because our insurance group is one of the largest in the real estate investment space. So we insure, I don't know, Shawn, you could probably give the numbers, but
around 65,000 locations right now.
Yeah, so 65,000 locations. So anytime you're building technology for 65,000 locations, it's crazy. So, but launched a portal. We're launching all these new products to keep up with the Geicos of the world that have set the standard that it's a low touch industry, but yet we're so dedicated to like personal touch and, like Shawn said, getting in to know these investors. So it's really been this very delicate balance to provide the technology that's needed to keep up with that, but also stay customer focused and centric, like Shawn was talking about. So,
gotcha. That's awesome. Well, I guess I'm proud to be only one 1/1000th of your insured. Let's put it that way. No, I'm just kidding. I have small beans. This is a question for both of you. How do you guys attract and find good talent, and then of course retain them? You know,
John, you want to take a stab at it?
Yeah, for insurance, it's a constant challenge, right? Because we're growing so quickly. I mean, roughly 30 to 40% month over month, and finding quality insurance agents that believe in the same thing we do, it's challenging. I would tell you that the retention that we have with our employees is extremely high, and it's because of the atmosphere and the environment that Eddie and the ownership group have built. I mean, they're very, very loyal to our team, and it's all about getting the right people in, finding the right seat on the bus, and allowing them to grow. So we believe in promoting from within and giving everyone opportunities, and again, it starts at the top down. So. But yeah, it's a challenge. I mean, Kansas City is not necessarily a hotbed for insurance talent. You typically look on the coast and some nicer climates for that. But we've done very well.
We have a lot of issues there, especially in the technology world. Kansas City being in the center of the country, we've got a lot of technical experience here, but it's not a San Francisco, it's not an Atlanta, it's not a Chicago. So we've been working really hard at that and trying to convince people like Shawn to move across the country to Kansas City is a little bit of a difficult thing. I'm having a hard time even doing it myself. I'm still commuting back and forth. But the other thing too is but we've got a really exciting environment here. The growth fuels that, and so a lot of people are here locally because of the growth of the company. We're constantly in Kansas City's top growing companies, especially in the real estate investment space. I mean, we've got to be one of the bigger players just because of the sheer volume of which we do business. And so I'll tell you, I don't feel like we have a hard time attracting quality talent. I feel like we have a hard time attracting talent that understands the real estate investment space. This has been the Wild West for, 30 years. My grandfather and father owned hundreds of rental properties. I didn't even know there was an industry. I didn't even know there was, education and all these pieces that tie to this industry until just a few years ago. And because it is the Wild West, it's so hard to find great talent that also understands the investment space. Because we get a lot of people that understand investing in stocks, bonds, mutual funds, things like that. And then you got a lot of retail real estate experience. But real estate investment experience, that's really hard to come by.
Gotcha. I noticed you mentioned earlier, Eddie, you have kind of like the vision and then you have your implementers to work with. Is that, I'm assuming, is that from the Traction EOS type toolkit? Is that what my question would be, what kind of tools or books that you guys have read that kind of help you keep track of all this stuff, that help you implement?
Sure. Yeah, we use a lot of the Traction implementations. Some of it doesn't make total sense for us. Like, for instance, our insurance group, because there's so many facets, we got a massive call center that's actually right above the floor that I'm on, where you got 80, 90 people sitting up there. And the book Traction was really not written for an environment like our call center. However, our American Association of Private Lenders runs 100% on Traction EOS. We have a big contractor group called Radius, where we're in, I think, 29 locations with general contractors, and they run on EOS. So we kind of subscribe to the values of EOS, and those values to me are high levels of accountability. It's pretty much everybody knowing where we're going, understanding how we're going to get there, and making sure that we have accountability and metrics to measure along the way. And those are the core functions of how we run our business. Some of them use the terminology of Traction, like rocks and pebbles and all the different, level 10 meetings and all that good stuff. But then, like our insurance company runs more on the foundations of it, but doesn't actually run the specific system. So.
Right.
Gotcha. That's awesome. Shawn, how do you keep track of all your products, producers, all that stuff on a weekly basis?
That's tough, and I've surrounded myself with a pretty good team that does that for me. Because I'm on the road so much, just like Eddie. I'm kind of like the face that goes out and gets out in front of everyone and educates our investors and potential clients on how to best protect their assets. So without my team, I wouldn't be able to do that. But it's a constant struggle because it's, particularly from the carrier side, this is a very schizophrenic type of market, and it has been for a number of years. So you get a carrier that maybe is engaged for 3 to 6 months, maybe they have a bad month, and all of a sudden they want to pull out of the market. So it's our responsibility to make sure that we're out on the front end of that, and knowing that if we need to replace a carrier for for a change in their appetite, we can do that. So I rely on my team very heavily to stay out in front of the the agent partners and things of that nature. But in terms of the carriers, that's kind of where I come in and making sure that we have the right relationship to make sure that all of our investor clients are protected in the best way possible with the most aggressive coverages, cost-effective options as well. So it's a kind of a double-edged sword there.
That's awesome. You both mentioned that you're now in the investment space, or were and are now. So curious, whoever would like to share. People don't really care about the investments that work well. People want to know about the investments that don't work well. So curious if either one of you would want to share an investment or a challenge or a learning opportunity that you went through on any one of your investments. Does anybody want to share?
Yeah, I will. I'll jump in on that one because I'm right in the middle of it right now. I've got two of them. So I've been a single family investor for a long time. Have done a lot of multifamily syndications. I love multifamily. And I'm invested in probably 8 or 9 states. And just started getting into hospitality, investing in hotels in the past 2 years. So we started a program here at Affinity called it's called our investment club. And so everybody can throw in 20, 40, 50 bucks a month. And we pool that money together, and we actually will flip houses and give the profit back to the employees. So trying to make sure that our employees, the couple hundred employees that sit here in the building are pardon the phrase, but eating our own dog food, right? Like, I mean, we're making it, let's eat it, so that we can have better conversations with our investors and things like that. So our first property was a wholesale deal that we bought. And I was so excited about it. I was actually going to buy it myself if the club didn't buy it. And it went really well for the first 6 weeks. And we have had a massive issue in Kansas City with labor. We just have a huge labor shortage. And so now it has turned into a nightmare. I mean, it's taken, I think, 4 or 5 weeks just to get drywall on the walls. I mean, it has been a mess. And so now I've got 60 or 80 employees that are all invested in this property. They're very first foray into investment, and they're getting a full dose of what it means to invest in real estate. And so it's been kind of fun. It's a learning experience. And I keep saying things like, you can only go up from here, but we'll probably make a little bit of money on it. But in the end, it's been rough. And so understanding what it's going to take to get the job done is obviously a huge one. I got a second one for you too, real quick. Mm-hmm. I'm a serial entrepreneur, and so I'm starting a coffee brand in Atlanta right now. And so, but I rarely do commercial development. And so in my mind, you just go pull permits, you go get licensed contractors, and no big deal. So I lease this space, my business partner over there in Atlanta, I lease the space, 3-year lease. It's a brand new space and in a very up and coming county in Atlanta. And we're going to build this out and build a coffee brand, right? And so I passed on buying a building. I thought I'll just lease an A-grade space. And little did I know in this county, how stringent they are on commercial build-outs. So right now I'm in my 6th revision with my engineers, and I've spent over $50,000. And I have not even there's no construction going on because it's my plans being stamped and all this stuff and engineered, and it's like a 2,000 square foot coffee shop. I mean, that's no big deal. And it's a brand new space. All I'm trying to do is build it out. And so, some lessons learned there is sometimes just because you're great at one modality of investment doesn't mean that it always transfers to the other. And so we'll see. I'll let you know next time we talk if this coffee shop, if I don't burn this thing we're not insuring it, so I might just walk up and pull this thing down. But anyways,
we're not insuring the building, but we are insuring the business, right?
Oh, so, that's true. You are insuring the business. I better be careful about that.
I'm going to jump in and say, well, at least you're insured the right way. But yeah,
there you go.
Shawn, do you split all claims as well? No,
no, not at all.
No, that's sometimes you're at the mercy. I mean, we're here in the Boston market, and honestly, Eddie, the lack of labor is certainly a huge problem that we have here. I mean, finding qualified tradesmen, general contractors, and of course, even the town boards, everyone's backed up. Everyone's backed up. So, and despite the fact that some guys probably do have an ego and like to have you spend $50,000 with an engineer redoing and redoing and redoing. Well, what if you do this and this is not really to code and tell me everything right now, right?
Yeah. I know. I lost it the other day. I was basically saying, I was like, okay, so it's called a zoning resolution because I'm having trouble with the zoning board. I was like, it's called a zoning resolution. That means it's a law. It's a book, right? And I said, and you're and my taxes here in this county pay for your existence. So is there any way that my taxes can ultimately tell me through you what this zoning resolution means, which is a book? Like, it's like, how hard is this? Like, stop changing the rules, just tell me what I need to know up front. But anyways.
I've been there. We won't mention any names, Somerville, Massachusetts, that no developers will ever go to anymore just because it's that hard. But anyway, another story. Thank you for sharing, Eddie. Shawn, how about you? Any good investment stories?
Yeah, I can just say from, and I'll always kind of retreat to the insurance side, but, even as an investor that was maybe 2 years into the insurance industry when I started, as a buyer, as a potential buyer, you've got to do your due diligence, because we got hit on an apartment building, about 10 units in Cincinnati, where we didn't know that there were flooding issues. And all these insurance companies are like Big Brother, and they're all sharing information. So if I go to obtain insurance coverage through a carrier, that's all fine and good, and they'll sell me the policy for closing so that I can buy that, so I can actually close on the property. But they're going to go back for 30 or 60 days and try to figure out and uncover what issues at that property maybe have happened in the past. If they uncover something that I didn't let them know about, which in this case they did, they can drastically change the terms and the cost of that insurance policy, or just outright cancel us for misrepresentation of facts. So doing the due diligence on the front end, working with the seller to find out what the history of the property is by getting loss run reports or clue reports if you're buying it from a homeowner. That's so vital, because again, all these insurance companies, they love sharing information, and to the detriment of to the investor that's possibly purchasing the location. And that all changed about 5 or 6 years ago. It used to be the buyers, didn't really, weren't always, penalized for the sins of the previous owners. But yeah, over the last, say 5 or 6 years, it's been longer than that now, probably closer to a decade, that they're sharing information and coming back later and saying, well, we charged you $1,000 to start with because you didn't let us know about this. Now it's going to be $3,000 for the year, and that can hurt you. I mean, if you don't see that coming. So got to get out in front of that and understand the property that you're buying.
No, for sure. Yeah, words to live by right there. We've had, fortunately or unfortunately, on the insurance side, right? We've had our share. I mean, you buy and sell properties, or buy and hold properties enough, you eventually come into a claim. And I got to just say, this particular company, it has been amazing with handling the claims, because most of the insurance companies obviously don't like to pay them out. But the whole point of it is that when you're there, if it's a legitimate claim and everybody's there to try to help, it goes so much smoother. So, I guess I'll thank both of you guys on that. And Shawn, you specifically, to try to help investors through that process. It's a terrible process. It's terrible.
It can be, especially if it's not handled the right way. And I think that's why, certainly when Eddie came on board, we found the need to develop Affinity Loss Management Services, which is kind of like our internal group of licensed agents that help you through that claims process, because we don't want our investors having to exhaust more time than what's necessary. Hand it off to the experts and let us do our work for you. That's part of what you pay for.
Awesome.
And the great part about it is that we're investors as well. And so we understand how important it is to get that property tenanted, back rent ready, and so we get it. We're investors as well. And so we kind of hold that expectation for ourselves.
That's awesome. I have a question that one of our, you guys might be familiar with Tim Ferriss. Tim Ferriss puts together one of these questions for his podcast guests, and we love asking you guys too. What is one of the favorite purchases you've had in the past 6 months for under $100 that you've made that has changed your personal or professional day-to-day routine?
I'll let Eddie go first. While I think about it.
That's a tough one. Under $100. It's funny because I feel like as a kid, $100 seemed like $1 million. Now $100 seems like 10. Like what can you even buy for $100 anymore? But anyways, under $100. I'm a voracious reader. I read like crazy, and I buy probably 3 books a week. It's just this constant flow from Amazon that comes in, and I would say the best thing that I've bought in the past 2 or 3 months was a book, and it was a book by it's called The Icarus Deception by Seth Godin. I don't know if you've ever read it. It's The Icarus Deception. And it really helped me. We've hit a couple of ceilings in our business where, because we are the biggest in our space, sometimes you just feel like, how do we get any bigger? How do we go any further? And the book really dealt with, the Icarus Deception is the kid's dad, told him, if you fly too close to the sun, your wings will melt. But if you fly too close to the ocean, you don't have enough wind for lift. And so he was talking about the constraints and the parameters that, that this dad put on his kid, and the kid ended up flying too close to the sun and, died. Anyways, but he called it the Icarus Deception. It really helped me understand and really start to reframe, because I don't want to build a $100 million company. I want to build $1 billion company, and so for us, there's nobody else, we're looking at Mount Everest and there's no tracks on the hill. And so we know we got to climb it, but it's like, we don't really always know the path. And so it's probably one of the greatest books I've read this year. And so probably the best $10 I've spent. How's that?
That's awesome. Yeah, great one. I haven't heard of that one either. That's great. I know Seth, though. That's great. Good stuff. Cool. Shawn, how about you?
Eddie kind of stole my thunder, because I was going toward the same place of a book. And, I actually paid double because I bought the actual book by Amazon, because the same thing. I get 5 or 6 a week. But I also bought it on my Audible account so I could listen to it on the planes, because we're always traveling, or certainly when I'm working out. It's called Relentless by Tim Grover. And that's really about, becoming a cleaner, right? Being the Michael Jordan or the Kobe Bryant of your industry, and the right mindset to go into your day about. And I think that's been a huge change for me. And, it's benefited me countless times just over the last 6 or 7 months. Love the book. Would recommend it for everybody.
Oh, that's awesome. Guys, I can't thank you enough for being on today with us. I mean, it's incredible the kind of information you guys can share in just a half hour. But what's the best way for people to get a hold of you or to research you, look you up? Go for it, whatever you want them to do.
The easiest place to go is to go to affinityworldwide.com. Affinity has 2 F's, affinityworldwide.com. You can see all of our brands. You can reach me at ewillson at affinityworldwide.com, ewillson at affinityworldwide.com. Shawn?
Or you can actually, if you want to check out the insurance program, it's nreig.com, NREIG.com. My email address is Shawn, SHAWN, at nreig.com. My direct line is 816-398-4096 for anyone that wants to call in and talk insurance.
Whoa, really? You just gave your personal cell there. No, I like it.
No, that was my office number, so it'd be
okay.
Not my cell.
That's awesome. Guys, I can't thank you enough for your time today. Thank you so much. And can we have you back again, maybe?
Absolutely.
Anytime.
Awesome. All right, thanks, guys.
Yeah,
Thank you.
For having us.
Appreciate it.